Welcome back. On It's the Economy, we are looking at the tourism sector. Hotel stocks have shot up by 100 to 200% in the past 1 year. EIH, for instance, East India Hotels, formerly, has surged 152%. Indian hotels, nearly 100%. And between them, Chalet and Taj GVK, Lemon Tree, all of them, between 100 and 150%. Reason, besides the rising prosperity or the demographic dividend, there is also the newfound rise in religious or spiritual tourism spurred by the Ayodhya temple. But tourism has had its problems as well. The rise in the tax collection at soars from 5% to 20%, the poor flow of international tourism and therefore of flow of foreign tourists into India, visa problems for Indians headed to the United States, and of course geopolitical problems like Ukraine, Palestine and Maldives. So how will tourism shape up in FY25? We have two experts joining us, Srikumar, the Senior Vice President and Co-Head of Corporate Ratings at ICRA, as well as Rajesh Mago, the Co-Founder and Group CEO at Make My Trip. Gentlemen, thank you very much indeed for your time. Rajesh, let me start with you. What's the sense? What's going for tourism in the current year? We are seeing hotel stocks, shoot up about 100 to 200%. What's going for tourism this year, and more importantly, FY25?
Yeah, thank you, Lata. First of all, good morning, and thank you for having me on the show. You're absolutely right. I think what is driving this is the momentum on the demand side. Coming out of first year of recovery, I would say full recovery post-COVID in fiscal year 23. This year has been, significantly driven by the demand momentum, where people are, all segments of travel have sort of come back, and not necessarily only leisure, but the business segment, the VFR, the, pilgrimage tours and so on. And that is what is sort of, I guess, driving the stocks for the hotel industry as well. In terms of 25, outlook for 25, if you look at some of the neutral reports, the third-party reports, WTTC is talking about some 7.8% growth for the next year. There are a couple of other reports which are actually talking about double-digit growth for the next year. I'm personally in the second camp. I think the momentum is going to continue, and the growth is likely to be more double-digit even in the new year. And I would say that for a couple of reasons. One, I think it's on the supply side. And as you probably know, that this year, while the demand momentum was great and the prices were high because there was some supply constraint, there were engine issues, go first issue on the air side. While on the hotel side, the supply has also been sort of expanding. A lot of the hotels have announced to add more hotels, etc. Now, the benefit of all of this is going to come in the current year, fiscal 25, as the supply improves, as we see more and more planes coming up, some of the operational issues get resolved, go first issue is behind us, and the benefit of the hotel, a lot of the hotel expansion that has been, sort of work in progress for the last couple of years is also going to play out in this year. And I would also add, besides the hotel, I would also add homestays as a category, because there's a lot of the new supplies coming into the market as well. So if you look at on the supply side, that is one big reason that I believe that the benefit of that will come in the next year, and that will drive the growth. And if you look at
Rajesh,
the demand side,
Rajesh, let me get Srikumar in as well, and I'm coming back to you with lots more questions. Srikumar, it looks like there has been a 15% rise in hotel ARRs and a 12 to 14% growth in tour operators' revenues. That's the reports coming in from both ICRA as well as Crystal showing us. But how does this compare with pre-COVID? Is this just a jump in terms of revenge growth? And therefore, what are your own forecasts? Will FY25 be as good as FY24 in terms of demand?
Good morning. Thanks for having me. To answer you, the growth is much more stable and steadier in the ongoing upcycle. Generally, tourism sector in general has seen a strong growth in the last 2 years. We are seeing growth across, hotels, airlines, and tour operators. A comparison between a pre-COVID and a post-COVID, pre-COVID, we did have a concern with regard to the, supply-related aspects driving. A lot of supply got added between the period like 2010 and 15, although there was a good demand between 2016 to 19, but the growth pace of growth was not quite significant. However, post-COVID, what we observed in the hospitality sector was that the recovery was strong, and this was supported by favorable demand from all segments like leisure, MICE, business travel, and spiritual travel. And the levels reached the pre-pandemic days in FY23 itself. However, the hoteliers were cautious in committing to the next phase of supply addition, and the capex was largely restricted to the completion of the already deferred projects. So the demand-supply gap kind of widened and supported this upcycle. So if we have to compare the pace of growth in the demand, obviously it is much better and much more steadier. What will also support the growth is the fact that demand supply inequation will obviously support the demand per se, the growth per se for 1 to 1.5 year more. We expect the hotel sector to grow at 14 to 16% in the current fiscal, that is for FY24, and to higher single digit 7 to 9% in 25. This is again coming on a very high base. Occupancy levels are still at decadal highs of 70-72%, which will be continuing in FY25 as well. The pan-India premium hotel IRRs, which was the peak was seen in FY 2008 at above 8,000 odd levels, that will be hit in FY25 for the industry as a whole, although some of the hotels have already crossed these all-time high levels in FY24.
Okay, I got that from your data that we are likely to reach 72%, which was a level reached only in 2008. I'll just come back to you, Srikumar. Rajesh, there are two issues that both of you are flagging. The growth of hotel rooms is seen at 4 to 5% or 4.5 to 5% according to ICRA data. It takes a while for the capacity to catch up. So room rents, the ARRs and the charges are also at, kind of 2 decadal highs. Likewise, air travel, the capacity constraint is so severe with or without Go Air. I mean, there are airport constraints. There are so many flights cancelled out of Mumbai because of airport capacity constraints. Both hotel prices, premium hotels that is, as well as air travel are likely to remain more expensive in FY25 from what little data I have. What's your reading and whether my numbers are right, and therefore will that impact the growth in tourism?
Yeah, no, I think your observations are not off. Specifically, if I would say more from this year's perspective. And overall supply, and I think we have to keep that in mind in India overall for branded hotels, or call it premium hotels, a total about 160,000 rooms in the entire country, which is like much less than you compare with any other country. Like you compare it with Dubai, you compare it with Singapore, you compare it with Thailand, etc. It's much less, and therefore more and more sort of commitment is coming through from the hotel industry in trying to expand it in various different models. And there are various different models are being tried, which are not necessarily, completely greenfield projects. Maybe some of the non-branded properties are being looked at very, aggressively being, and trying to convert them into branded premium hotels with refurbishment and some commitments, and bringing in their own sort of playbook of managing the properties, etc. So I think it is only going to improve going forward. That is the first point that I would like to make. And the second, I think the interesting point that we may be missing out this whole price rise or the ARR also is that it also has the sort of impact of which is baked in of the 3 years cumulative inflation, because for last 3 years, I mean during 2 years COVID, no price increase had happened. And fiscal year 23, when this was a first year post-COVID recovery year, again, the prices had not really gone up. So to my mind, it's actually the cumulative impact of the inflation, which is baked in and the pricing is also being missed out. And if you sort of factor that in and then start to look at the prices, you will see that this new base that is getting established. And then on top of that, if you see, the price rise, you will not see necessarily, a very high rate of increase there. So I think it'll sort of balance out the thing. And I think it's an important point not to miss out.
I get
But
that.
I do think on the supply side, fundamentally, we do have a supply constraint in our market. And premium for sure, but if I look at mid-segment, sorry, just to complete the thought on the supply side, the important point, the mid-segment and the point I was making even on the premium side for homestays. There is a lot more supply coming in on the second home, the villas segment, which is the premium segment, which is a very welcome addition to the premium segment of the supply as well. Like we will have, over non-hotel alternative accommodation, on our platform, about 125, 130,000 rooms already, all segments put together, but a lot of that chunk is also premium. So I think some of these factors
Rajesh,
are only going to eat out the supply.
Yeah. Rajesh, I'm sorry, I'm trying to pack in as much as possible. What about the issues in terms of, say Maldives has now taken a back seat? Does that eat into the overall package, or it just gets replaced by other destinations? Secondly, international travel has not quite picked up. I mean, Europe in a recession, the US visa issues are still like so lagged because of, bunched up demand of the last 3 years. So will all this be a negative, or will it actually be positive? Because, there will be revenge clearance of visas. So will all this make it better next year?
Yeah. No, I think, again, both good points. So I'll tell you about the Maldives. First, Maldives was a very, very attractive location for Indians and people who are traveling. And given the demand momentum, one sort of city or one country having some kind of an issue, the consumers actually moved to the other location, the other destination. So it actually had no impact, to be honest. I mean, there was obviously a temporary dip on Maldives per se. And people, and maybe the growth rate of Maldives will get impacted, but overall growth rate is definitely not, because it's getting replaced by other destinations. And the other point on outbound is also very, very interesting. I actually think that because outbound or the international travel was one segment where the recovery was lagging. Now in this year we have almost caught up to the pre-pandemic level. And when I say we of course, and also the industry got up.
Inflow, Rajesh?
Not the inflow. I'm talking about the outbound.
Inflow hasn't picked up, is what?
Inflow hasn't. Inflow is about, I would say, in the 70s, and some inbound tour operators would say that it's sort of catching up really fast now. And we don't really focus on inbound travel, so I have sort of less up to date info on that. But outbound has caught up. Outbound has got up, and that's only going to just go in one direction.
Got that. My apologies. I'm being rushed by my producer. Srikumar, you get just about half a minute. What's the which is the industry that's likely to do well? Will tour operators do better? Will it be hotels? And for hotels, what is the growth expected?
I would say all the three segments will do quite well for FY25. More importantly, hotels, if we have to talk about it's a sustained growth because the supply is going to catch up quite late. Airline sector as such, the domestic traffic as such is expected to reach a pre-COVID levels only in FY25, although the international traffic has already reached in FY23 itself. Tour operators is obviously a resultant of the growth that is catching up in hotels as well as the airline sector. So they have been supported by that, except the issues that you have rightly pointed out on the visas and also a few other headwinds that they had. But in tourism sector as such is likely to continue its momentum for FY25 in a much meaningful manner for FY25.
On that optimistic note, thank you very much, gentlemen, and thank you for speeding up the editorial that you want to present to us. We have to wrap up on Bazaar. Chartbusters coming.